Alrighty, here we are. Good morning, ladies and gentlemen. Uh, Welcome to the morning stream here with Marziti. We just had the non-farm payroll numbers hit, and wow, some big moves across the board. This is Marziti here with the Bullish Bears. Now we're just kind of waiting this out a moment to you know, anytime we see these big moves, we need to give them time to shake out. So we're just kind of going to have to give this a moment to shake out, like I say. All right. Let's just kind of get into doing some zooming. We're going to start obviously here. Let's start with ES. That's one of the things most majorly affected by non-farm payroll. I mean, some of our things like our pivot points, and the ADRs, those are fixed regardless of the report. But we can see, obviously, things like implied volatilities and all those kind of things can definitely move around. But let's take a look at what happened with this report. First of all, let's see what the report said. Let's pop over here to Financial Juice, and they said non-farm payroll. Here we go. Let's see if we can get into that. Non-farm payroll 254. The forecast was 150, so it beat by 100,000. I believe. No, I don't. I'm trying to remember which one last month got revised back down dramatically. No, it wasn't this one, because it was like an 800,000 job cut from the report. So obviously it's not this one, since this one's not even a million. Anyway, U.S. unemployment 4.1, so they're saying employment is down a little bit, but payroll is up. So those two make sense together. Obviously, that's very positive as far as, a lot of the Fed talk has been about, they're taking their eye off interest, and now they're looking at jobs. And so they want to see jobs numbers going up, of course. Well, they do and they don't. On the one hand, if there's too many jobs out there, well, that tells them there's too much money in the system, and then they actually may increase the interest rate. If jobs are down too much, that tells us that businesses are not expanding as much, and if they're down too much, then they may have to lower the interest rates. So we'll see how the market works with this. Short-term interest rates drop as traders price in fewer Fed rate reductions. Why? Because the non-farm payroll was so much higher than anticipated. Okay. So let's see. Did you ping it yet? I did. Come back to it. So anyway, all right. So markets initially liked this. We had so far a pretty good move here from 57.63 to as high as 93 roughly. So we'll say that's a 30-point move. We'll just call it that. It did hit pivot point support 1, ADR, and almost hit pivot point, or not support, resistance 2. Resistance 1, resistance 2. Now, the key thing here is, while it's possible regularly to see us go up above resistance 1, it's very rare, unless we have a runaway, to close beyond R2. So we typically see, notice this candle right now, it went up towards it, it's rolling back. This is the half-back move that we would expect. I'm on the hourly at the moment, so it's just the one candle. Crude, on the other hand, went down. As we can see here, crude went down, and it is already moving towards its half back. Oh my gosh, look at gold. Wow, wow, wow. That is something else. You know, a lot of times gold and the ESNQ, um, the major indexes, the ESNQ specifically, and gold move in opposite directions. I've talked about this before. It used to be very correlated that they moved in opposite directions until Bitcoin came onto the scene and became a competitor for gold for that slot. So now gold is not as correlated with the ES and the NQ as it used to be, but it is still there. Again, we're on the hourly here, so where we were above the central pivot point, my pivot points, we did hit resistance 1, we've rolled over, broken support 1, and the lower ADR. So, what does that tell us? Well, as you can see, we're doing the halfback move right now. This is going to be a tough one to call right now because everything is thrown off. The markets overall. Now, this is the net sum. This is not counting gold. This is the ES, the NASDAQ, the Russell, the VIX, the dollar, and the bonds. Some of these move together. Some of them move opposed. And so when we add and subtract them all together, we get sort of a net, what is the overall market doing? And we see a very strong, no halfback move here yet on the overall market. So that obviously is very bullish. Okay. All right. Let's, oh gosh, this is going to be such a tough one to call today. If we start with crude on the left, let's first pay attention to this low, to this high, and if we put us a fib that would put us right here around 72, 73, which also happens to be where, let me now remove that, where the central pivot point is. So there's a very good possibility we are coming back down to the central pivot, 72, 70, around 73, let's just call it 73, on crude. Because that would be the midpoint of this range. Would not be surprised. How do we know if it's going to do that? We'll have to come into the lower time frames and look to see. For one thing, we do still have a fair value gap right here that has not been touched. I don't pay a lot of attention to fair value gaps past, that are 2, 3, 4 days old. Now again, we're on the, let's go ahead and move down to, let's move everybody down to the 15, and let's just see what that shows us. All right. There's that pivot point around 73. What do we see here? All right, first of all, this is all chop right here. So be very cautious about trading in this zone. You can use this zone as a target, but I highly suggest you do not take a trade while you're in that zone. Now, if it breaks out of that zone and you think it's going to continue to run, that's one thing, but do not take a trade because you can see this is just a lot of choppity chop until it broke out. All right, so that puts us here around, call it 74 on the low side, 73.5 on the low side there, the high side. So 73.5 to 74. I would not take particularly any trades in that zone. Let's move over here to the ES. Again, you see this same kind of zone here that we want to be very careful about. I'm going to call the concentration of this zone basically here. So let's not take any trades here. Again, you can target the pivot point and go into the zone. But if you're in this zone today from, we'll call it 57.50 up to around 57.60, I would not take a trade. Now looky here, we are still looking fairly bullish on this candle. We do have a DeMark sequence. Now we just had a 9 rollover, but you've got to remember, you say, well, the DeMark there says we're supposed to do a big pullback. Well, news and things like that always are going to override, and the institutional move is going to override any kind of a technical study that we have. So the override here is obviously very clear. We went fairly high. We've got a target up here at 94.5. We've got ADR full here at 58.11. So, can we get there? Well, we've already moved 78% of our daily range. So, do we exceed the daily range? Yeah, sure, we exceed the daily range. Do we do it often? We don't do it very often, and that's the key takeaway there. So the problem that we run into here is this is a very, very long candle extended. In my opinion, the only trade that I would be looking for here possibly would be a half-back move, but you've got to have a signal knowing when to get in. If we touch this resistance 2 line, then I would definitely look for an opportunity to go short, but you will want to keep a tight stop on that. It may want to keep going. We don't know. We just don't know. Let's go over here and take a look at gold. Again, see, we're already starting the half-back move. I'm going to take a pass on gold today. I just don't see anything on gold here for today. I'm still liking this trade here on crude down to that pivot point. Again, though, it's an issue of a good entry. We do have a fair value gap, so it's very likely we're going back into this chop zone, that we may come back up into this fair value gap, and I would not take the trade here. I'd wait to see if we go to this fair value gap, and then what do we do from there? If we roll back out of it, then yes, 72 or 73 anyway looks like a good possibility. If we go back north, then obviously we've got this high right here, but there's not there's a little bit of actually there's not a good trade north here, I don't think, because there's just not. We have to remember that all of this activity in crude right now is because of the Middle East. And, they are concerned that the war in the Middle East, or the conflict in the Middle East, is going to get hotter. And if it does, in fact, get hotter, then that, we got all this oil that comes out of the Middle East, and they get concerned and nervous about that kind of stuff as far as oil. And there is some discussion about taking out the Iranian oil fields, that Israel may just go ahead and just this would be a kneecap. If they take out the Iranian oil fields, this will be a kneecap strike. And you can just expect to see oil take off to the moon. Forget Bitcoin. Oil will take off to the moon. So, any rate, okay. Let's go over and take a look at Edgeful real quick, and let's just kind of see if we can get any kind of statistics that may help us today. Now, Signet has been showing me some stuff here about Edgeful that I've still got to do a little bit of learning. And I've got to do a little bit of learning there because he's talking about by size, and I don't quite, I've got to do a little investigation on that. He's got more experience with edgefill than I do, so we'll just have to see where that goes. However, if we look at the weekday, Friday weekday thing, edgefill overall says that because we're in a gap up situation, edgefill is only saying about a 50%. Now, Signet drilled down to something called by size, and we gap fill 100%. I don't know this one yet, so I've got to go study this as far as what this actually means, but it is kind of showing a much stronger percentage chance that in a gap up we're going to fill that gap. So what is that gap we're talking about? Let's come over here. Let's maximize the ES. We're on the 15-minute chart. Now, by the close of the SPY closes at 4 p.m. Eastern. So what we're going to do here, we're going to kind of play the same idea. Here is the close. Oops, no, that's 4:30. I'm in the wrong place. Here's 4 p.m. close right there. All right. So there's the 4 p.m. close, which puts us around 57.50. Just kind of zoom in. So when the SPY closed, the ES was around 57.50. So the idea being a gap close would mean that we would come back from where we are now at some point today. We'll look at the orb breakout things in just a moment, which just drills in a little bit tighter in time. But the gap close is to come back down here to 57.50. So Signet's thing there says that we've got a pretty good chance of coming back down to it. You got to ask yourself here, this clearly is a huge liquidity. I'm going to go with the opinion that could we come back down here? For the moment, I'm going to go with the 50-50 thing that we saw over in the original edgefill that said, 50-50 chance on the SPY. I don't see it coming back down. That's a pretty huge drop back. It could, of course, but we've got a lot of volume right through here. This does make this a very large volume node area. It is possible we can come back to it. My gut feeling says that we'll probably stay in the range of this big candle. We may break out and make our way up today. I don't know on that yet as far as the edge. Well, I've got to learn a little bit more about that other report. Okay. Let's put this back. Let's go look at some other edgefill statistics. So remember, we're in a gap up situation. Let's take a look at the orb. Now, the orb is the opening range break. And by weekday, the first 15 minutes. So the first 15 minutes, so the orb means we take the highest high within the first 15 minutes. So from 9:30 to 9:45, we take the highest high, we take the lowest low, we draw a box around that within that 9:30 to 9:45 time period, and that becomes a box, if you will. So the question is, what are the odds of breaking out exclusively to the north side or exclusively to the south side? Remember, it can still come back into the box, but a breakout says there's a 27% chance that it will break out to the top and from 9:39 and not break the bottom. Now, it can come back in the box, but they're saying there's a 27% chance it'll break the top, but not the bottom. 11% chance it'll do a breakdown, 61% chance of a double break. So that would tell us that it would take out the high from 930 to 945. It would take out that high, flip back around, and take out that low. Now, we can also come back and say, well, what if we expand it from 15 minutes to 30 minutes? Well, now we're starting to see there's an even chance, a little bit greater chance of a breakout. Obviously, the breakout now is taking more. So we really kind of now have a 50-50, if you will, if we only look at these two here. So, I mean, it does give us a little bit more edge towards a single side break. Again, remember, though, that it can still come back inside the box. Now, I'm going to shorten the time period. Let's take, and I still got the same numbers. Okay. So Edgeville is saying, especially if we open up to the 30-minute, that the 30-minute sample instead of the 15-minute sample does look more promising to a north side breakout from the 930, 945, or excuse me, 930 to 10 box there. Lastly, we'll take a look at, where is it? Did something get moved? Hang on. I'm looking for the Asian market correlation. There's the pre. Did I miss something? Well, where'd it go? Pre-market. Okay, well, oh. Futures. That's why. Yes, we're looking at the ES, and I want to look at price action, market session. There we are. Duh. Tokyo versus New York. That's what I wanted to see. We're going to sample the last 3 months. We are in a gap up situation, but we need to go look and see what happened in Tokyo. Now, again, the news report that happened overrides everything, but let's just kind of get an idea. Let's go back to the ES. Here's the market open. Let's get us a box. Let's just see what happened. Just as a normal routine, Tokyo opens at 8. So the low of the Tokyo session was right here. Closes at 2. All right. So how did we do? We opened down here. We did close slightly bullish. And so what they're simply saying, that the question is, even though this is a big high up here, the question is from the open to the close, we'll say that the Asian session did open, or excuse me, did close bullish, not by much, let's be honest. You say, well, why isn't there a bigger number here? It's because they're waiting on this candle right here. And you see all this chop right in here as they are waiting. Doesn't matter whether it's London or Tokyo or whatever, they're waiting, have been waiting for this candle. That's the issue. And that's why we see such flatness all around here, because nobody wanted to make a really big move. But it did finish ever so slightly green. And we see here, therefore, that if Tokyo closed green, New York's got a 55% chance of green. Not a big, no help there, just quite frankly. That's really not a statistical edge on that one there. All right. So today, Edgeville is not throwing us much of a bone. And a lot of that is because of the market news. We've got to basically see what happens with the market news and how this settles out. Right now, I'm going to say let's wait till market opens. Unless you've got a very specific plan, wait till market opens. Wait till the initial move of the market opening. In other words, market opens at 9:30 Eastern. Let's wait until 9:35 minimum, maybe 9:45, and let's see what happens. One of the things we can expect on a big candle move is chop and consolidation to follow that. Remember, when we see a big candle, a lot of times we will see a lot of chop follow it. Just choppity, 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 chop. Why? Because all the money was expended to make the move. So now they don't have any more money and that they can spend today. So it's just chop, chop, chop. Now that doesn't mean that we couldn't do a slow grind up or a slow grind down, but what we typically see though is either runaways, like over here on crude we see a runaway, but we're not necessarily seeing, go here, we got continuation, but we're still looking for these targets up here at like this full ADR move. So let's wait until 9:30, 9:45-ish. Kevin's on today. He'll be doing supply and demand. We're going to have to wait for that and just kind of see. Like I say, Edgefield statistics today are not going to be that helpful to us simply because of the market move. And so I'm not saying that it's a useless tool by no means. I'm saying today's the exception. Still a good company and a good product. All right. Has anybody got any questions before I wind down today's stream? Oh, you know what? I completely forgot to do our Rorschach. All right, well, a little late to do that, maybe, because especially with all this inside choppity, choppity, chop stuff here. I think tomorrow or Monday we're going to have a much better Rorschach chart to look at. But as you can see, look at this big magnet zone here. And like I say, we have come right back into it. That is something that we need to, from a Rorschach chart look, we see this heavy trading area here. That tells us it's a huge magnet for places to return. And in fact, after we ran, we grabbed some type of liquidity here. We did, in fact, come right back to it. What do these big zones mean to us? Well, it means that everybody traded was content and accepted the price right in this zone here. They accepted this price over here on this crude where we're looking. Same thing here on the ES. This was a very, very well-liked price. We can also, if I were to get into a volume profile, I'm 99% certain I'd find a volume node sitting right there. And so we do see that price comes back to these areas a lot. If we go over here, let's see, maybe I can find something on the 60. Just jumping back a couple days. Yeah, right here. Let me zoom in on that. See this little area right here? The minute this area formed, it tried to go out. It comes back into this area. It goes out. It comes back to this area. So when you see these kind of little clusters like this, you can expect price to come back to it as a magnet. Went down, came right back into it. Here's that cluster here. And you can see we've got a cluster here, got cluster here, but at any rate, price comes up, comes back down into the cluster, price went down, comes back up into the cluster, up, cluster, down, cluster, sitting in the cluster over here. Watch these for these areas because price has a strong tendency to come back to them. They're also no trade taken here zones because we don't know what it's going to do when price is in these little clusters. We don't know if it's really going to go bearish or bullish at this point. So we wait until we have a break. If you're into the, and unless you have a definitive target and you're willing to take the stop, that's fine. You may have a good 2-to-1, 3-to-1, 4-to-1, whatever kind of trade you like to do if your stops will allow for it, kind of thing. Again, we go back. Here we see cluster, maybe, well, here was a cluster. Came back to it, ran it, came back to it, back to it. Starting to see this. And back to it, right there. So these are very popular areas. Anyway, all right. So I hope I will, somebody make sure to remind me on Monday to do the Rorschach. But beyond that, I think we're going to wrap it up here, unless anybody has any other questions. I hope everybody has a good weekend. And remember, if you can't be good, at least be good at it. We'll see you later. Y'all have a good weekend. Marziti signing out.